Hello and welcome to The Appointment. I am Pranjal Sharma. Joining me today for a conversation is Ananth Narayanan, who is the CEO of Myntra as well as Jabong. Ananth, thanks so much for being with us today.
Thank you for having me.
You have the unique situation of running two very well-known e-commerce companies in India, and perhaps one of the few people to do that.
Yeah.
And you took charge over a year ago. How has been the atmosphere so far? First, of course, you had to focus on Myntra, and now Jabong is part of you.
Right. So look, I started spending real time from July last year, so it's a bit more than a year. It's been fabulous. I believe that e-commerce as an industry is here to stay. I think we have to figure out the right business models to make it work. I believe fashion and lifestyle within the e-commerce segment is one of the most exciting because I think you have the right margin structure where you can build both a large and a profitable business. For Myntra, we've had our best year ever in the last 7 years, right, on both performance and health indicators. Performance has been great. We've grown almost 80% year on year. We'll cross the $1 billion mark. We, of course, acquired Jabong, which has been a big milestone. So both the number one and the number two player sort of being under one roof. And 3 is we've actually had a good focus on healthy unit economics. So when we ship out every piece of apparel, it actually makes money for us. I think that's a good thing to do. So I think all those 3 have been terrific. But most importantly, perhaps for me, is I think just Myntra as a company. I think just the winning mindset, the culture of the place has really started to come together. And I'm very excited by that because I think that's really our core strength.
But as you said, it's taken a few years to reach where you are.
Yeah.
So what has changed in the last couple of years, a few months? So apart from your presence.
Yeah, well, I wouldn't attribute too much to my presence alone. But I think the things that have changed are the following, right? I think the first is there is now a healthy appreciation that you need a business model that works long term. Not because for the sake of making money, but just for the sake of sustainability, right? Second is I think the e-commerce customer has come of age. I believe that if you provide value, sometimes the value is a discount, other times the value is faster delivery, other times it's fabulous selection, or using technology to personalize it so that you give you things that you want without even you knowing it. Any of those are value, and the e-commerce customer is now starting to appreciate real value. Therefore, we've been able to reduce our overall levels of discounting at Myntra, and that's been another big shift.
So you don't have to lure a consumer to the platform anymore, which was probably part of not just for Myntra, but for most retail commerce companies to bring people onto a relatively new concept and platform.
Right. So I think that's certainly gotten easier. So no doubt about that. But I think what they come for has also changed. So I think there are 2 different things. So the first is them coming onto the platform with the Myntra brand name becoming more known, better known is actually helped. Second is, look, we're focused on 3 very simple things. We're focused on selection, service, and engagement. Selection means you provide them with the best possible products. People are coming to shop, right? How do you make sure that there's the right selection? It's not unlimited width, it's curated. It's a fewer and limited number of things that we want to provide, but we want to read it right, and we use technology to do that, right? So it's not just random selection, but it's database selection, so we get the selection right. Within selection, we are also focusing on private brands and women, both of which are important segments for us. The second is service. We are a mass premium platform. We want our service to be better. Our NPS, by the way, is at 50. It's, I think, probably the highest in the industry.
So for a person who has no clue about this
NPS, terms, jargons.
What does it mean in real terms?
So NPS is very simple. If you have 100 people shop on your platform, how many of them recommend your platform to friends and family? If that number is, if 50 basically say, look, I will recommend, 10 say I won't recommend, and the remaining are new, and so on, right? It's the 50 minus 10. So it's 40 is your NPS.
So that's also a symbol and representation of satisfaction.
Absolutely. It's about customer satisfaction and customer delight. So you don't usually recommend to friends and family unless you're delighted.
How do you track it?
So we actually survey it. So if you just think about it, in the app itself, once the delivery happens, you have the ability to go in and rate various parts of your experience. We get lots of responses because our overall volume per month across Myntra and Jabong is almost 18 million monthly active users. So even a small percentage of that is very statistically significant. So we basically get input from the customers right after they buy, right? As well as right after the product is received. And both those form the basis for this consumer experience.
Has when you say that your customer is coming of age, it has two parts to it. One is that existing customers who probably started buying on e-commerce platforms, including Myntra, are now far more aware and mature and know how to manage and navigate their way across such platforms. Second is a new category and section of consumers coming on board. So how do you differentiate between the two?
Yeah, it's a great question, by the way. I think it's a bit of both. So if you look at it roughly about 5 million customers actually transacted last year. This year, that number will be closer to 8 million.
You're talking about the industry?
No, just on the Myntra platform, just for Myntra, right? If you just think about that for a minute, the 4 million that have shopped, we have an 80% repeat rate. So that's still a big chunk of people who come back and shop, which actually, so that's the evolution part that you're talking about. There, what happens is people who've shopped 2 or 3 times, have gone through the full experience, the return experience, now are starting to be more comfortable, right? And therefore they look for, what we usually find is their selling price, for example. The average selling price of an item they buy goes up with every transaction, right? The new customers that are coming in is also interesting. I think it's a combination of our marketing as well as the industry maturing are also now looking for more selection and more services, right? So for example, one interesting thing is we have something called try and buy. In fashion, the real problem is fit, size and fit, right? So that's what prevents people from buying online, right? So we have a service where you can order 3 different sizes. The person shows up at your house, waits for you, you try them on, whatever fits you keep, the other you return, right? And that, by the way, is increased adoption. But the interesting thing is, by the way, our newer customers are adopting that a lot more.
Those who knew you earlier have faith that they have made the right choice, but in terms of seeding the market and expanding it, you are ruining it. But isn't the cost per delivery going up with something like this?
Yes and no. While the cost per delivery is going up, the inventory doesn't get locked away. Otherwise, what happens is you have a piece that goes to the customer. There's a 30-day return period. So they return it on day 15. So the inventory gets locked away and working capital gets locked away, right? Whereas here, the inventory gets back into being live the very same day. And what we also find is our service delivery agents do some local optimization. So if you're in a complex, we originally thought that a try and buy will cost the person 8-9 minutes to do, whereas a normal delivery will be 5 minutes. What we find is it's only 6-7 minutes because they actually give this, go deliver something else, come back and pick the other one up. So there's a local optimization that happens. So the costs are not as much as we thought they would be.
What is the difference between Myntra and Jabong?
Myntra, by the way, is more men dominated. So we do 60% men, 40% women. Jabong does the reverse, 60% women, 40% men. Myntra has more of their private brands, more of our private brands. Jabong has a few more international brands. So there is a difference in selection and a difference in customer profile. There is also, by the way, a geographic delta where Jabong is stronger in the NCR, Delhi area, and Myntra is stronger in the south and the west. So there's lots of differences. But the real question to ask for me is not why the brands are different, but what can we do with both brands, right?
I was going to ask you what's common and how do you leverage their presence?
Yeah. So look, we are in a market which is actually getting made today. So just to give you some facts, right? The overall online fashion market is probably $2.5 to $3 billion, right? That represents a 2.5% online penetration. The market overall is $100 billion. By most estimates, this market will be 35 to 40 billion in 2020, 2021, 2022, give or take a few years, right? So it's an enormous market growth that's staring at us. The real question is not about market share today. It's about who grabs the growth, right? I believe with 2 very powerful brands, with some of the common back-end systems, supply chain, technology, etc., we will be able to capture more of the growth than with just one brand, right? So that's what we're hoping to do with the Myntra and Jabong brands. Of course, there will be some areas of synergy, whether it's supply chain, technology, etc. But in reality, the real question is, can we get to more customers through brands? The other thing, as we did our research, we found is that consumers do one choice. They look at a couple of platforms before they make it. So if you have both platforms, the probability of the purchase being within your platform, and if you take the Flipkart group overall, if it's within the 3 platforms, then the probability becomes higher. Right?
So it's a classic situation where the same company would have 5 different soaps, so you end up buying one of the soaps of the same thing. But you dwelt a lot about fashion and about creating brands. One of the discussions in the public discourse on e-commerce is how Indian products and a lot of small manufacturers, how can they be given space on such platforms?
Yeah.
And if I marry that to the idea of building brands, what kind of strategy emerges for you?
So today, by the way, about 20% of Myntra is private brands. Actually, it's closer to 23% now. So I'll answer this in two parts. One is brands, the other is how do we support Make in India. On the brands, India is an unbranded market today. 80% of that 100 billion market that I was talking to you about is unbranded, right? There is no reason, if you look at evolution of GDP, of demographics, of internet usage, why brands should not be as penetrated as, say, China or eventually the US. Traditionally, the problem has always been one, distribution reach, and the other is lack of consumer data. Myntra as a platform has both. We have lots and lots of consumer data and lots of distribution reach. We get to 19,000 pin codes. So I believe we actually, as a market leader, are in a position to actually help create brands. So we're doing a few different things. One is, of course, our own private brands. Some of them are Bollywood-led, others are our own private brands, and we're trying that, which is All About You, Roadster, HRX are our three big brands, and then we have about 11 labels, and we're continuing to do that. The other is we run something which is quite innovative. We run a program called the Myntra Brand Accelerator, where we take small brands and we actually work with them to support them with data, with insights, sometimes with sourcing and design capabilities to make sure that we can scale those brands. So that's another area where I think there's lots that can be done.
So all of this is then sourced from India, and not all of it is imported. Even the mass products or mass premium are not imported. Are they all sourced from India?
No, they're sourced from various places. I think a majority happens in India, but about 30-40% probably happens outside India. 60-70% happens in India. In terms of how we actually go through the Make in India, I think two things. One is, of course, through this current Make in India, the brand program itself. Second, by the way, especially as you think about women, boutiques, smaller manufacturing units are actually quite interesting, right? Because we want a lot of choice. So one of the things that our women's team has done is actually has a program for introducing almost a boutique a week. So these are much, much smaller brands.
It's like showcasing.
It's showcasing, right? And we showcase each of these. Then they have the ability to actually have a stage which is national, not just the local sort of pin code that they're at. Right?
But the challenge there would obviously be in terms of volumes. They would hit limits on volumes that they can provide to you.
Absolutely. Which is where the Myntra Brand Accelerator program comes in. So we can actually help them. If there are brands that can scale well, we provide them help to say, how do we actually set volumes up? How do you put in place your tech systems so you can actually scale with us? So we provide that as a service to some of the smaller brands, right, as they want to scale.
The manufacturing and the supply chain business and the entire effort on that, how has that changed in the last few years, and how do you see that evolving? I mean, do you see any fundamental shifts taking place?
Sure. Well, I think there have been some fundamental shifts, and then there will be more with GST. So let's talk about both, right? So one is, if I just look at supply chain in India, I think the infrastructure has evolved dramatically over the last year. If you look at us, a year ago we used to service 12,000 pin codes. Now we do 19,000 pin codes, right? So which is a dramatic sort of scale increase that's actually happened. The second is, by the way, the customer now wants more than just delivery. So we're piloting a whole bunch of value-added services.
So in some ways, you're also re-energizing these micro businesses.
Absolutely. If I think about going forward and what changes about supply chain, see, look, historically, we've always sort of been very tax-based in terms of where the manufacturing locations are, the warehouses are, the distribution centers are. Now that you actually think about GST, we can place it where the demand is. I believe as e-commerce firms, we actually have a very good sense of both current and future demand because we can see those patterns. I think our entire supply chain and distribution network will get rethought of with GST. We have a team already working on it, but I believe it will be very positive, right? Both from a cost and from a demand perspective.
How exciting or challenging is it to try to get these two very distinct companies to work together?
Yeah. So look, I think culture makes a big difference, right? And I believe culture is sort of the fundamental building block of any of these businesses. So to answer your question directly, it's actually hard. One is because geographically we're separated. One is in Delhi and the other is in Bangalore. So that itself forms a difference. The good news, by the way, is I think our values and our culture is similar, right? If you look at the Myntra vision, it's to make the world a more stylish, colorful, and happier place. It's not about selling clothes. It's not about selling fashion. It's not about commerce. It is about really actually doing all of those things, right? Making it more stylish, more colorful, and happier. I think that, by the way, applies to both Myntra and Jabong. And that's what we're trying to do. And I think if you have a common purpose, then alignment becomes easier.
And business-wise, do you see synergies developing, let's say supply chain, logistics? Do you see those kind of cost advantages kicking in?
So firstly, I see the brands as two distinct brands. I think the brands will always be independent and it will be run that way as independent brands. Of course, there are areas where we will have synergies. We've already started implementing a lot of supply chain costs and cost reductions, which have actually been really helpful. Technology is another area where I do think leveraging each other's capabilities will be another area, right, where we will get advantages.
And speaking of technology, you're also using technology in very interesting ways. You said that you're also tracking how consumers spend. But if we go beyond that, there are a lot of policy challenges coming through. You mentioned GST, which is going to make life better. There is also, of course, demonetization, which is leading people towards using less cash and more other forms of payment. How does are these opportunities for you, or are they going to benefit you in the medium to long term, but not immediately?
Sure. So I think there were three things. I'll quickly hit all three. I think decoding, I think fashion and technology. I think that's the core of what Myntra does. I think of it as using technology to decode fashion. That's what we do. So I think eventually I see technology as an enabler for disruptive change, and I believe that that's why the growth rates that we have are what they are. Okay, so that's number one. Number two is on regulations and what they mean for us. I think GST, we've already spoken about. I think it's very positive for us, both in terms of creating transparency in the system, being able to place supply and demand where they actually make sense, as well as overall cost structures I do think will come down. I think on the other regulations, FDI and so on, I think they're the right set of regulations. Over a period of time, my sense is I think it's around how do we make, even before FDI, I believe that I think there's a lot of value in making businesses sustainable, which we spoke about earlier. So I think having some set of norms around discounting, around all the rest, I think helps, and I think, therefore we're compliant around it. The last is on demonetization. I think short term, there is an impact. It's not a major impact for us. So after the initial decline, our baseline has sort of shifted down by maybe 3, 4, 5%, but that's against a growth plan. So November, we grew by 50%, right? Our plan was closer to 80. So we still grew less than our plan, but I think, we still grew. Long term, I believe fundamentally it's a very good idea, right? Because what it does is it actually shifts the pendulum towards digital payments, which I actually think, from every perspective is always better for both the end user and for us, it's much, much better.
But even here, I think you've been flexible enough on, especially the cash on delivery format, to probably offering card on delivery. How is that panning out?
So that's been great, by the way. Thanks for asking. I think it's one of the innovations we did right after demonetization. So all our service delivery agents and all our partner service delivery agents were immediately equipped with a point of sale device, right? So literally, cash on delivery used to have 5% card on delivery. So, when you get it, you then decide to pay by card. That number has now become 50%, right? And that's fabulous. So you've solved the trust issue because the customer wants the package in their hand, and yet they pay digitally. It's the best of all worlds. So that's been a great shift for us.
Innovation is interesting, which you are driving, Ananth, but you came from the world of consulting. You were at McKinsey's, and now this is the big bad world of where, you have to sell real products to real people. How has this, how did you straddle the change?
So look, some things you take from McKinsey, others are new skills to learn. The things that I took from McKinsey are, I think, one is being in an unfamiliar situation, being able to problem solve and come up to speed things quickly, which I think, by the way, is a core skill in e-commerce because, frankly, everything changes all the time. So I think it's a good skill to have. I think what is different, by the way, is just pace of decision making and execution. I think you don't have a lot of time to analyze. You have to learn to go with your gut. I think those have been learning. I have a terrific and wonderful management team, I think both at Myntra and Jabong, and those have been hugely helpful in sort of getting me there. I think that's probably been the biggest learning.
And thank you for joining us, and our best wishes for your new career and for the success of Jabong and Myntra.
Thanks so much.